Oops. Okay. Jumped the gun a little bit. All right. Let's get this disclaimer in right quick. So today is oh yeah, I'm getting confused again, but today's Sunday, May the 10th. Happy Mother's Day, everybody. Um this is uh this is a great day to represent for the moms out here. I I am glad that you guys get to celebrate being a mom today, and I hope you guys had somebody take you out to dinner, somebody bring you some flowers or something like that. So hopefully that took place. If not, I can send y'all some in the mail if that didn't happen.
Mhm.
Um, let's go ahead and see what we got going on this week. Let me switch screens. Let's go ahead and switch over here. Let's go here first. Okay, so let's see what we have for the week. I haven't looked at it this week, but let's see. I haven't looked at the news this week. So looks like,
CPI and PPI.
yeah, looks like we got CPI, PPI this week.
Mhm.
Core retail sales, unemployment claims, and what do we got on Friday? Not a lot on Friday. Still got a lot of breaking news regarding I think I just saw last night that Trump stated, oh, well, not Trump, but there was a report that Iran replied with terms that they may agree with regarding the ceasefire and ending the war. Hang on one second. I think I'm sharing the wrong screen. I'm sharing the wrong screen. Let's go to, yep. So here we are. So it looks like we got red folder news on Tuesday, Wednesday, and Thursday. Nothing on Monday, but Tuesday, Wednesday, Thursday, we do have existing home sale. That's not a red folder, but we do want to pay attention to that news on Monday, um, at 10 a.m. We got our core CPI month over month, our CPI in year over year. And then we got the Fed chair nomination vote. That was definitely one. And they were expecting it, of course, to pass to go ahead and bring Warsh in as the new Fed chair. And then we have our core PPI month over month and PPI month over month. Again, we have yellow folder on Wednesday as crude oil inventories, but still make sure you pay attention to that because of the crisis in Iran. And then we have on Thursday core retail sales and unemployment claims. We've been coming in right at or just below the unemployment claims of late. So right now the expectation 206, so keep that in mind. And then on Friday, looking like nothing at all. Who do we got on the earnings chart, on the earnings calendar? Let's see. Any big names? One that I trade out all the time is Hims. They're reporting. Um, but I don't have a setup for them. We can take a look at them if you want. Just let me know. Um, that would be an options play. I may take a look at that chart anyway for my buddy. Take a look at that for him. Um, nothing on, nobody big I'm seeing off the top of my head that's going to move the market. Some familiar names, but not market movers. Yeah, a lot of familiar names, but not market movers. And we're looking like we have pharmaceuticals mainly in play, and a couple of in energy. Those are our two we probably want to look out for, but no big names for the moment. Um, yeah, now let me check this. Let me check Yahoo real quick. We haven't been on here in a while. Okay, right. So here's our week. Looks like Monday, we got a lot of companies reporting on Monday, Tuesday, and Wednesday, and Thursday. On Monday and Thursday, we have over 200. And then on Thursday and Wednesday, it's just under 200 different companies. And I'm gonna just scan through this real quick. Can I add the sector? No, cannot. That would be cool. Okay. Mara is reporting. That's one I might look at too. Mara's reporting Hims and Mara. I'm gonna look at those too on the options play. Let me drag him over. The expectation is to be down actually on the estimate for the earnings estimate and the revenue. They're expecting 181, pretty much 182. Let me see. We have gaps here and here. We already inside of this gap. And we just took out a high. Got this fair value gap. Let's see. A higher time frame. This is from the weekly. Let's see what we got on the monthly. I like this weekly fair value gap. 1227. Okay. All right. Let's see. Yeah, we took out a low here. And this midpoint, we already came inside of it. The low. And this is our new yearly low on Myra. So we come off the lows. Traded it into this fair value gap already. And that's where we're responding to. This is the weekly bullish fair value gap. And let's go ahead and go to the daily. Okay. It's a previous week low. Okay. All right. So we got what we want to see. This is one that I like trading. So I may take some setups off of this. Um, but it's a good habit to even if I don't take it, just to mark it up anyway. So just to mark it up is a good habit. So let's go ahead and I'll send this chart to you. Even if I don't take it, if I do take it, I don't know. I just haven't really been in the options world lately. But it does look like we could push down into worst case scenario back into this weekly fair value gap, especially if we don't beat the news. We could get a pullback. If not, we go ahead and push at least at or above this quarter point, this upper quadrant halfway point, and then we could likely see bounces at this order block or the weekly from last week, that area. And that's still inside of the order block, just a little deeper. And then worst case scenario, we come down to this weekly. I want, and we may, if we get back under this, we could look for more sales if we start the hole underneath that, but that would be the only time I would look for downside pressure on that. I'll drop this chart too. You drop this really quick. So that's Myra. Copy that link. Do I sound better this time? I sound better this week.
Yeah.
Like I actually got to sleep.
No, no, no. Today is good.
All right, all
It
right.
was not that bad that day also.
Yeah,
On
last time
Wednesday.
wasn't too bad. And yeah, you sound much better this time. He must got a lot
So,
of coffee. I drank a
No,
lot of coffee.
no.
you woke up early and talked to Crystal
I just
after
woke up
that.
early.
Okay.
Yeah.
Mhm.
Um, I woke up a little earlier and then I actually went to sleep. That's it.
Okay.
That's
Okay.
it. Let's
Mhm.
look at hymns too. Let's look at hymns. So we got our main low over here. Yeah, we'll have to go out that far. I don't know if this is a yearly low yet. Let's see, what is this? Yeah, it looks like it's yearly low. Okay. I hadn't looked at this in a while. Okay, then we got this previous month low at 1862. Let me just double check that. No, that's a previous week low. Okay. Alrighty. We got a previous week high right here, just underneath the yearly. So it's probably looking like, if I had to take an immediate guess at what I think is going to happen, looks like we still could be targeting this weekly high. So that's previous week high. So it looks like it's still at risk to come and grab this high for now. Gross. And challenge this yearly opening price again. That's what it's looking like to me on this. We had a gap that we just traded into. We're coming off of this gap right here. There's still some imbalance down here inside of this candle. But in particularly, we've held this gap. This was the previous week low. And then we have these highs, these equal highs right here, which pretty much encompasses the previous week high from last week too. So we'll go ahead and see. This seems to be our first target we need to consider. We already tapped it a little bit, but because we got equal highs here, I think we still definitely try to run through that. And then here looks like one of our main targets here, this 36.45 area. That looks like the yearly high from this year's high so far. So this is definitely looking like if we do break this, you can kind of see where we're headed towards. There's a gap right here. I'll go ahead and add that we could come into. Okay, so we get inside the gap. If we hold, we take out this high. Then we look to see if we're going to hold above the yearly opening price. And then we look to take out this yearly high. So that's what it's looking like to me. That'll be our overall goal if we beat and push higher. And then the downside target is we come deeper into this imbalance, push down deeper into the imbalance, and we get price to hold at or near this order block area, and then we push back up from there. And we could hold at or back in push back and down into this gap and hold, and that would probably be the better place for you to look for another move just to confirm this is if we do sell off from here, we could still hold this gap because that one is looking. But if we push down deeper um into this order block right here is another area in this little small one right here. Those are two areas outside and around this imbalance that I would look for price to come back into. But we'll see. We'll see. This one's not this one looking like it want to go back higher. So even though it's sold off a little bit, looks like it still want to go higher. So this is hymns.
If I'll ask this, like this gap you draw that, uh, this is gap, right? So there is FVG on top of that also or bottom also. Why didn't you consider all gap together?
Just because it's already responding to this one.
Okay.
We already have the move up pushing, rejecting this one right here.
So
That's
like
the only
because
reason why.
okay, so because it did that reaction, that's why you consider that. If not, if suppose it is above and we are assuming it will come to this FVG, will you consider all this gap and 50% of that one?
This one, yeah,
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 all gap. Means this
yeah.
one also and upper one also.
Mm-hmm.
Okay.
Yeah.
Yeah, all this.
This one right here.
Yeah.
Yeah.
Mm.
You really could just consider this whole range from this high to this high.
Mm.
But
Do
I
is
just
this go
because
ahead.
like if you go to the weekly, it's
Yeah,
actually
this
the
is the
whole
whole.
thing.
Uh-huh.
But
I'm
in
just
particularly, we are really responding to the gap that's
Uh-huh.
right here.
Okay.
But
okay.
it's kind of it looks
Okay.
like it's not covering that range because of the time frame I'm using.
Mm-hmm.
But in reality, if we go to the weekly chart, you could actually draw this out as a
Yeah,
just a fair
50%.
value gap,
Mm-hmm.
and
So like
you'll
Yes.
still get the same thing.
it made that gap smaller, right? And
Mm-hmm.
good entry.
Mm-hmm.
Okay.
Hey, Corey, along that, would is it fair to kind of say like first, since on the lower time frame is already responding, but if it was to keep going down further, if it wasn't responding yet and it was going down further, then we could take it to the higher time frame February gap, which is
Yep.
that what you would kind of okay. Okay.
Exactly.
Yep.
Exactly. But because you just essentially like it's like, considering fractal, like everything's happening on all the time frames, right?
Mhm.
It just may look different and you may get a different level because you're on the lower time frame or because you're on the higher time frame, right? So we see it's a fair value gap on the weekly chart, right? But inside of that fair value gap, it's responding to a certain level. And if we were to let's just go ahead and draw this one out on the weekly, right? So this is the weekly fair value gap, right? It's a weekly bullish fair value gap. And I'm going to add in the quarter points. So
Yeah,
this
so
is
right now I'm doing this.
25.
If this is bigger, then I'm doing that quadrant.
Yeah. This is 25. This is the 75, right? So even though we're on the weekly chart, right? The 25% or the halfway mark between the middle and the high is 25.53, right? You'll notice that this gap pretty much covers that area. And where we got the low is pretty much at this quarter point, right?
Mm-hmm.
What's at that quarter point that's going to cause us to move? That's this gap right here.
Okay.
So it's just a reminder, right? Like everything we do is done in fractal compensation. Like I guess that's how you want to call it. I don't know. But in terms of what you see on the lower time frame is the same thing you should see on the higher time frame. It's just where does it line up? And if we were to leave this on, or we never had this, if we never drew this weekly fair value gap on, there is still something that's reacting to this 25.53 level, right?
Yes.
And you can see this low right here is 25.35. Where is the most important level near 25.35? That's 25.53. The bodies of this candle right here, this candle and this candle. The close on this candle is 25.65. The close on this candle, or the open on this candle is 25.61. Just a couple of points away from this 25.53 area. So now you can look and say, like, hey, it is reacting because of this particular level right here. If we go further to the downside, we got 24, we got 22.48, and then the low we have 20.95. What's at this level? There's an order block. What's at this level? There's a smaller fair value gap. And then if we go even further to the 4 hour, here's the 4 hour chart. There's still fair value gap here. There's another one right here, fair value gap right here. Let's go down lower. Let's go down lower again. Fair value gaps all throughout this range. But now you can see at this quarter point, we can break this quarter point and this half, the low in this area in half, and we have an order block that's right there. So right halfway in between here, there's an order block along with this fair value gap, along with this fair value gap, all of these gap, all of this imbalance. There's an order block right in between the middle of this quarter point and the low. There's an order block. So we could see price come here in particular, right around 21.81 level, right? Let's go even further. Let's see what else we got. Still just straight up imbalance. Last time frame I'll drop down to is the 15-minute. Okay. Now on the 15-minute, right? There's an order block right here. Consistent with this level. It's just below. There's another one right here, consistent with this level. It's just below, right? There's a order block right here, consistent with the middle of this range right here, between the middle of the upper quadrant and the middle of the fair value gap, which is right here. There's an order block. So you can see every time we break this down, there's a reason to consider one of these levels, just as if we were to consider it from the higher time frame. There's also a reason to consider it at the higher time frame. We just broke it down to see exactly where it's moving from, which in this case is this particular gap that is pushing off of. That makes sense?
Yeah.
Okay, cool. I think I dropped this one in there already. Let me just double check. This is him. Yeah, he's in there. Okay. Alrighty. So let's go ahead and switch screens and we'll go ahead and get started on the rest of the charts. So let's start with dollar. So dollar, we pushed up last week and we dropped and sold off, and we kind of created a range, short-term range between this high and this low. We took out we took out the previous week low, took out this previous week low, and then we kind of stayed inside of this particular new week opening gap right here. We gapped to the upside, but we're still in between this high and this low. So right now we've gapped open on price. And the question is, do we fill this gap to the downside or do we keep pushing? If we keep pushing, we trade above the monthly, trade back into, we're sitting right inside of a daily fair value gap too. So we kind of just been ranging inside of that fair value gap where the high is here, the low on that fair value gap is here, and we just been kind of ranging inside that gap with us trading outside of it here and here, but then eventually we just staying inside of it. So we're trying to see how we're gonna work out of this fair value gap. If we're gonna go lower or we're gonna go higher. All right. So that's kind of the gist of what's going on with dollar. We're just kind of going back and forth inside of this larger fair value gap from the daily. And if we do fill the gap, we could be taking out the low from Friday and Thursday. Those are targets. And then if we trade lower, we have the weekly low from the week a couple weeks prior that we just tapped. And then we have this weekly low from last week. We got a lot of liquidity below us, and then we have a larger inverted fair value gap that we could be coming down to if we want to continue lower. Uh, I like the probability for us to bounce off the one right now, given that the one is sitting just near the low of this new week opening gap. So I'm looking at the 1-2 move to give us the move to go higher if we do trade down into the gap and hold. If not, we sell off in between and our 2-3 move sets up and we start to take out some of this liquidity. And once we take out some of this liquidity, we could see ourselves having our bounce for the 3-4 from here. And then we can start the new move up. Because in this case, if the 3-4 does bounce, it's likely going to come back into the new week opening gap that we just created. And then we could see price hold inside the gap to go higher from there. But if not, we get our sell off inside of that gap. Our 4-5 takes us below the 3, and we start to take out the rest of this liquidity. On the upside move, if we're going to leave this gap open, that means we need to trade at or above the monthly and the yearly opening price and look to take out this previous day high. And this previous day high takes us into a new day opening gap. And we're likely to get a reaction from this particular new day opening gap. So I think that our highest probability is the one that we get a sell off from. If we try to get a sell off from here, that makes sense because we would have taken liquidity from this previous week high and this previous day high and traded inside of the new day opening gap. So that's 3 pointed entries that we could have price react from. So one is actually my highest probability, even if that we get a sell off at the 1-2, and we try to hold on the 1-2 when we get at or around the yearly opening price to go ahead and hold and push higher for a 2-3 move higher. If we don't get it at the 1, we get it at the sell off at the 3 after we take this liquidity from this previous week high. Our sell off starts at that particular area. We have a new week opening gap from a couple weeks before, and we have a order block from at or around this area as well. So that's kind of the reason for the 3. And our 3-4 retracement could lead us to start a new move to the downside, or because we traded at or above the new day opening gap, we could see price hold the 4 and we push higher for a 4-5 move. So I like the 1 more likely to give a sell off, but the 3 is good as well. So we could see price sell off from there as well. But let's go dollar. This is dollar DXY. All right. Let's see. Let's go gold. Gold has started to trade slightly in the range as well between this low and this high. That's their previous week high from last week. On the open this week so far, we've gapped to the downside. And first thing that I'm going to be looking for is how we react to this gap. If we push higher, we take out this little short-term liquidity. Okay. And then we have the previous day high from Friday. And then just above that, we have the previous week high, this previous day high, and then we have new week opening gap. So this is my main targets, this previous week high on the upside. If we do push up, that means we're going to fill this gap and use the gap to go higher. Once we take out these short-term liquidity areas, this liquidity pool, this swing high here, and maybe even the previous day high, we could be coming back into the weekly opening gap to use that to go higher. So our 1-2, if once we get our 0-1, our 1-2 could hold inside of this, and then we push higher for there. And then our 2-3 move takes out our previous week high and into likely this new week opening gap from a few weeks before. And then once we get inside of that gap and above this liquidity, our 3-4 sell off could happen there from inside of this gap. And if we do get our 3-4 here, our 4 could hold at or around any one of these highs and maybe even go as deep as the weekly opening gap if we haven't traded into it yet. But if it does that, our 4 either continues to sell off or we have the 4-5 move to go higher. So I like to see my 1-2 move trade into this gap. If we don't trade back into the gap, our sell side move happens. We go ahead and take out these couple areas of liquidities, these equal lows at this point. And then we look to trade down to the monthly area where we could get our bounce from the monthly and we go higher from there. The 1-2 trades us back into the new week opening gap. And if we want to get a move after we trade back into that, it could happen there. If not, we use this gap at the 2 to go lower to take out the 1 and trade back at the monthly. Now, if we do get this 2-3 move, this 2-3 move could end early because of this monthly opening price. So we'll definitely need to consider that. But if we don't, there's a small order block that's near this low that pushed us higher. We could be coming back into that for the 3. And if we do that, that could be an attempt for the 3-4 move to get back to the monthly and back into this range for the new week opening gap on the 3-4 bounce. If not, we fail at or around the monthly opening price, and our 4-5 move sets up to take out the low of the 3, trade through the order block, and possibly trade through this daily low and into this previous week opening gap. I know y'all know this makes sense. So then we should be tracking.
Yeah, track.
So that's gold. And now we'll look at VIX. VIX went into a range as well. Like we opened last week here. I mean, I'm sorry. We had this weekly low from previous week low. We gapped open here. We took out all the highs. We set a high right around 1908. But once we made this high, we traded back down through the gap, took out the low, set the low of the week, and then we pushed back up off of the lows, set this short-term high here, and then we just went sideways inside of the weekly opening gap. So once let's extend that out. Once we got back inside of this gap, we just kind of went sideways for the rest of the week. So now we got this high, this low, this high, this low. And this is our most immediate range, this high to this low. We got these price just kind of sitting right now. So we're kind of 50-50 on VIX. But given that the indices gap to the downside a little bit, small gaps, but not anything big, that means that we should probably have VIX gap to the upside. So if that's the case, this opening price likely takes us above this high and this high more than likely. And then we'll be looking for that 0-1 move to come back at or near this new day opening gap with the low being 1795. And then whatever we get on the gap, which should probably be at or near these highs, that should be where we see our 1-2 retrace to. And then we either hold it at the 2 and get our 2-3 move higher, or we sell off from there. If not, our 2-3 pushes higher, we take out this swing high at the previous day high if we hadn't done it already. And then we try to take out this high, this swing high that we have here at 1852. And we could likely see our sell off at the 3-4. But at the 3-4, if we do get that sell off, we're either going to start the new move downside here, or we'll likely hold inside of this gap, this new day opening gap. And then our 4 takes us higher for the 4-5 move to take out the 3. And then this target from the target previous week target high becomes our target. From the downside perspective, which now that we see that there's going to be a gap on likely, this becomes more of a gap fill, which would be the move to the downside, but we don't know where the gap is, so we're not going to consider it yet. But for now, this low is the first low at risk. There's an order block here. This order block is the start of this move that pushed us higher, so that's why this one's in place. We push down to this order block and we see if we're going to hold here at the 1-2. The 1-2 pushes us back near the monthly opening and back near the new week opening gap. If we don't continue higher from there, the 2 sells off from around that area. And the 2-3 takes out our 1, and then we aim at this previous week low. There's a bunch of liquidity below the low that we made at 1602. So this will be one that once we sweep this low, this will be one we could definitely see a lot of movement off of. Again, the 3-4 could push us at or around this order block and even as high as this gap near the monthly open. and we can see sell off at the 4. If not, the 4 pushes us higher. If we get the sell off, the 4-5 move sets up and we trade even lower. The biggest draw is the yearly opening price, which is 14.85. So that 14.85 price, if we keep going lower, we're gonna try to go down to that yearly low. So yearly opening price. So I'm just not sure or if, but if we do just keep dropping, that yearly opening price is definitely one that I'm looking at us to come back to. Here's Dow. So here's the gap we already had on the indices. We gap to the downside. We closed right around 49, 747, but then we gap to the downside on the open. So far, this gap is left open, and we're trading back down into this daily fair value gap. We got this swing low right here. We got the daily low from Wednesday that are in pretty much in sight. Those are going to be targets to the downside. And then once we get through those, you can see there's an order block right here. I won't draw it, but there's an order block right here that this 0-1 move could be trading to see if we get a hold from there, right? If we do, our 1-2 trades us back into this fair value gap, and we could see price holding here, and we can go higher from there to push us back into this range for the weekly gap. If not, our 2, I can see the 2 selling off from inside of this daily fair value gap, even as high as this new week opening gap, simply because we could just be getting that bounce off of this fair value gap to push us in here, and then we could see the 2-3 move happen from there. And if we get the 2-3 move happen from there, we trade back through this area, we take out whatever low we make on the 1, and then we start looking to aim for this previous week low right here, which is also inside of a fair value gap from the daily as well. So that would be where I'd look for the 3-4 bounce. If we get the 3-4 bounce, same thing as before, we could see price push higher from there. And if not, the 4 stalls at or around one of these areas. And then the 4-5 moves takes out our 3, this previous week high. And then we can start looking at possibly taking out this previous week low. From the upside perspective, we'll need to see price push back inside of this gap on the 0-1 move to go higher. And then maybe this 1 is a failure to take out this high. And then we trade into, on the 1-2 move, we trade into this weekly opening gap, right? And then we hold for the 2-3 move to take out whatever high we made at 1 and this previous day high. And then we get right at or above the monthly opening price. If we do that, our 3-2-3 move comes back inside of this bearish fair value gap, which we already sold off from a little bit on what's that, Thursday. We sold off from it on Thursday. And we try to come back into it again on the 3 here to try to take out this previous week high. We can see our downside move happen from the 3-4. But again, if we have the move from the 3-4, could be a new sell-off, or it could be just a pullback. We get our pullback on this at least down to the monthly. Our 4 lines up with the monthly opening price. And if we want to hold and stay positive for the month, we get our 4-5 move to take us higher, to get us to take out the 3 and the previous week high if we haven't taken out. And then we haven't made an all-time high on, we haven't made a new all-time high on Dow yet. So that's kind of one of the things that we could be waiting on because we made an all-time high on ES and on NQ. NQ in particular has been driving price lately, more so than ES, but they both have made new all-time highs, and Dow has not made all-time highs to take out that one from February. So we kind of expect that Dow will take it out and make a new all-time high soon. But if it doesn't, you can see why it wouldn't, because we do have this area. So if we start to see like major sell-off in NASDAQ, we likely won't see this high get taken out yet, since NASDAQ is driving us right now. And it's kind of like tech stocks and that are leading us. So right now, and you can see already, right? Dow has pushed down, but you see NASDAQ has already came inside of the gap, and we've actually just made another all-time high. So you can see we used the gap to go. We gapped down, pushed up, already filled the gap in, and we've already made a new all-time high. So let's talk about the upside move. So we've already gapped down, held at this order block, pushed back in the gap, held the gap, go higher. So our next level above this all-time high, which the all-time high is right now, let's just round it to, what is this all-time high? 329,383. Let's just round that to 29,400, and which is right around here. Pretty much made that high already. So next level is 29,500, which is right around the one. So our 0 1 should take us to 29,500 area. And then that's where we should get an attempt to get a 1 2 move. The 1 2 pushes us back in this range, maybe at or around the high. And then we try to hold to get our 2 3. Our 2 3 takes out that 29,500 area. We can get a pullback anywhere above this high at the one. So we got 29,600, 29,650, and 29,700 as potential areas to get pullbacks from for the 3 4 pullback, right? And then that again could hold at this high likely or anywhere inside of the 2 3 range. And worst case scenario, we come back into the new week opening gap if we hadn't done it yet. If we do that, 29,600 area, if we get above that, if we don't get the sell off at the 4 3 4, our 4 5 move could take us anywhere near 29,900 to 30,000 on that. So we're reaching. We have a high probability to reach 30,000 soon. And once we reach the 30,000 mark or at or around that, that's probably where we get our next major sell-off from, because that's our probable, that's a very, very probable whole number that we can likely see price trade through. And we get a good rejection from there. Sorry about that. So we could be seeing 30,000 soon. And if we do, it doesn't surprise me. From the downside perspective, we've already traded through this gap. If we do get a sell-off, there is a 4-hour fair value gap. And, if we don't trade into this, I would update this to the daily on Tuesday, because this should get the daily fair value gap created on the closure of Monday's candle, and it'll be at this low for now. So I would update this on Tuesday after Monday's market, or on Monday night. when we get the closure for Monday, because this 4 hour will become a daily fair value gap, right? And if we do sell off, we trade into this, we could likely hold for the 1-2 and then come back into this if even though we already filled it. Our 2-3 takes us below the one, and this area right here looks like it's going to be a breaker that we end up using if we do come back into that. And our 3-4 could hold inside of this breaker. Um, Again, breaker is we have lows, we sweep the lows, those lows make new highs. This area, last up candle, becomes the area that becomes high probability area that we hold in right here. And really it's this whole move right here from the body to here that becomes our breaker. So we likely don't see price trade below this candle. And even if we do, it wicks it and holds it to go higher. So our 3-4 is a high probability area that we get another bounce from if we didn't get it from the one. And it also lines up with the 4 hour fair value gap. So that makes sense for us to come back into this area and push higher from there. If we don't, we fail at the four. The 4-5 move gets to set up at that point. We take out the 3, we push down near or at this previous day low. And then there's a swing low just below that and one just below that as well that we can see price come back into. Um, so that's NASDAQ. And then finally we got S&P. Similar look, but you can already see when we gap down, we haven't filled the gap. We haven't made an all-time high like we did on NAS already, but it's inside of the gap already, right? If we do keep pushing lower, this swing low will be a target. There's an order block right here that looks like it could be our set us up for our one. If we get the 0 to 1 down to this order block, which could probably be our target. Our 1-2 sets up for the bounce here. And then if we haven't traded back into the gap by then, that's where we look to see if we're going to hold price to go higher from there. If not, our 2-3 takes out our one, and then we look to take out this previous day low and even this swing low right here on the 2-3 move to the downside. Our 2-3 could just take out this low, but you'll see there's a small fair value gap here. And then there's the weekly, daily opening gap from this was Wednesday. So we could be coming down into here on the 3, even wicking down it. And we can get our 3-4 bounce from there. If not, our 3-4 fails and we start to look at, if our 3-4 continues higher, we can also start to look at this candle being our breaker, just like we had one on NAS. This will eventually, if we push higher, this will eventually be a breaker, this particular candle right here. So keep an eye out on this Thursday 10 a.m. candle. Okay. Because we already traded above it, but we've actually only kind of wigged through it on these candles. But once we see price really, really push above that, we'll need to pay attention to this candle right here. So our 3-4, if it pushes underneath, we fail to go low higher. Our 4-5 move takes us down into this range. We even have a new week opening gap as well that we could be coming into. For the upside move, we've already pushed to the downside and we're starting to trade back into the gap that we created. Our last all-time high becomes our first primary target. And then once we get above that all-time high, we got to go into our quarter points. So our all-time high was at 74.28, which is 30 points away, 3 points away from 74.25. So that quarter point has been taken. Our next quarter point is 74.50 area. That's where we're looking to see if the one trades to. Our 0 1 should take us right at or above that 74.50 area. And then we should get a retracement. If we get a retracement on the 1-2 move there, if we need to, we trade back into the weekly opening gap and we either start a new sell-off from there or we hold at the 2 and we push up higher for our 2-3 move. That means that our 1 is at or around 74.550. Our 3 should be at or around 74.75 area. Even as high as the 74.90 area, because we know what that 90 area does for S&P, right? But if we get a sell-off at the 74.75 level, our 3-4 sets us up for a possible new move to the downside, or we hold at or near the last all-time high we made and this new week opening gap. If we don't get a sell-off from here, the 4 holds to create the 4-5 move higher to take out the 3. If we hadn't made the 74.90 area, that takes us to that area. And we could go as high as 7,500 on this move. So I know that makes sense. I hope y'all caught all that. This S&P. I know y'all too got that.
Yes, thanks, Corey. I have 2 questions.
Mhm.
One is about ES. So on that Thursday candle, 10 a.m. candle, this is where I got tripped up because at first I was in the bias of it selling.
Mhm.
And then I saw the bullish engulfing candle, and so I changed my my bias.
So you were looking at the buy.
No,
And
I was
then okay,
I was
you were looking
I
at the
was looking
sale.
at the sale.
Uh-huh.
Then I changed it to a buy when I saw the bullish engulfing candle. And then it
Mhm.
just dropped down and fell out the sky.
Yeah.
I was
Yeah.
like, what the heck? So
Yeah.
I didn't know how to like really play that one. But
Let
what
me
I
look at
did
my
was
notes. Let me see what I did on Thursday. It was confusing.
because I didn't even really, I was trying to understand like, why did I change my bias? Even though I had the bullish engulfing candle, but it was almost like I needed to wait just a little bit more to make that. And I
hmm
would have kept it at the sell. I would have kept it as a sell,
hmm
you know,
hmm
if I
hmm
just would have waited. And I was like, man, I was trying to figure that out when I was going back and looking, but I really couldn't figure that one out.
So in your defense, we're grinding through highs right now, right? And what we're seeing is like we're seeing price near all-time highs, right? And it's actually and they're not just regular highs. These are highs that are news generated highs, right? So what you're seeing is what, you know, you probably don't want to be looking for sales anyway, honestly, right now. And even though you know that it should be selling right now, and a lot of chances, like we're seeing price at areas where, right, under normal circumstances, we should really be looking for sale opportunities. But because it's just grinding higher price under conditions that we're not really getting a clean move from, it makes sense for you to kind of reject the sell off, because
Mm-hmm.
common sense says I'm seeing, you know, I'm seeing that it should be selling here, but they're just every time that we've seen price even slightly sell, we've seen an even bigger buy, right?
Yeah. Yeah.
So it's making you change your bias on purpose because they need you to be trying to sell right now so they can buy it up higher, right?
Buy it up.
So
Mm.
that's kind of the way price is moving right now. So if we look at like even this little candle right here around that day, on the day before, it sold off but immediately bought up. Sold off but immediately bought up, right? And then
Yeah.
if we go to the daily chart, we have had since this bottom over here, this bottom from
Yeah.
March. Since this March bottom, we've only had one, two, three, four, five, six, 7 down days.
Mm. Yeah.
You see that?
Yeah. Yeah.
So it's not looking to sell right now, and they're using everything that they can to push the market higher. And they've been doing that ever since we got our decision that we were going to get the ceasefire on the war, right?
On the war. Yep.
And price has just been pushing up higher ever since then, right? So with that being said, it's okay to look for the sale, but I if I take a sale, it needs to come with confirmation first, right? It needs to be some clarity behind the sale. Like if I'm looking at this, I may not take like let's look at Thursday's price action, right? So we near this high. Let's go 15-minute, right? This is it. We don't actually get to sell off till 11:45, right? So for me, if I'm looking at this and then in Thursday, I think that I don't even think I got in the trade because I just couldn't get a good read on it, right? We had unemployment claims at 8:30. They beat actually. I think the unemployment claims that were expected to be 205, it came in at 200. So that means less people applied for unemployment insurance. So that was actually a positive read, but
Mm-hmm.
we sold off, right? So and here, that's another thing, right? We
That was what
sold
I was
off.
confused about too.
Mm-hmm. Mm-hmm.
As to why I also kind of changed my bias to do the buy. But then it
Mm-hmm.
sold off. I was like,
Mm-hmm.
crap.
Mm-hmm. You can even see in my notes, right? There's no setup right now. I'm
Yeah.
not chasing the highs. I want to pull back into a real level with confirmation. If I don't get it by 10:30, I'm sitting on my hands. I'm done, right? Because I'm seeing that the charts are near all-time highs, right? And though we selling off, you don't get a real confirmation for the sell-off until 11:45. By
Yeah.
then, I should be done anyway. So you actually had a buy set up. Um, you had a buy set up on this. You needed to take this around 9:45, 10. You had order block, fair value gap, trade back into it, right? And that's right here. So uh you had a buy set up that was clean. So you had this order block. You had this move off the low, this swing. Then you had price returning to this fair value gap and this price returning to the order block. You taking the high. Oops. So you actually had a nice setup, right? Where this would have been your low, swing high, swing low, swing higher, right?
Yeah, I think I took it too late though, because it was on that next. If you see the next pullback, that's when I took it. Yeah. So not that one. I took it on the next one, the buy up, and that's when it just dropped.
Right. So you had
Yeah.
to move here.
Here, yeah.
And this would have been in the good time frame. This was 9:50 to 10:15 window, with this being your target. With this being the target right here. And this being another target right here. And you would have got this for sure. Almost got this one, but you would have came here and got this one for sure as well with no problem, right? So you would have been able to take this setup with a good risk to reward, where your risk would have been worst case 75 points, 70, I'm sorry, 7.5 points. Your target would have been almost 20 points. You could have reduced the stop loss to 4 points and still been in this at least to here for 17 points. So this would have been a great trade, for the buy. Now, you don't actually get the confirmation for the sell setup until 1:11:45, right? What you're looking at on the sell side is you have fair value gap right here. It got inverted. So you could have been looking at 11. You could have been looking at the setup at 11, where you could have used this inverted fair value gap right here, set up the trade off of that, where you would have been looking at from this high, we take out this low, we take out the fair value gap, trade below it, we get a sell off somewhere inside of the inverted fair value gap, and then you taking it down to here.
Yeah.
Because at this point, you still thinking that it's bullish. So you only thinking that we're gonna go down here, right? And then if you don't take it and you still feel confident about it, you take it again from here, and then you look for this low. But I honestly don't see why I would have taken a sell off here. And that's just me personally because of how I trade, right? With your stop loss would have been this high, and you would have been looking at a setup from here to here, with this being the main target right here. And you would have been looking at a setup that looked like this, right? Now, for me at 10:30, worst case scenario, I'm not looking for, by the time 10:30 hit, I'm not looking for no trades at that point. That's me personally, right?
Yeah.
So if this sell-off happened, I would have never been in that setup for the sale. But if you're trading later in the afternoon, unless I get something where it's a clear, all right, I've traded through this fair value gap, it's inverted. My setup's not happening in this case until 11:15 and 11:30, right? So And that goes into the next macro. That goes into the lunch macro where you could be taking a trade at or around lunch time frame. That's the only time I would have been looking for something like that. So for you to miss this, it's not something that I would take as a bad thing, because again, we at all-time highs, even on even if we look at Dow, I mean NASDAQ on that
So
Thursday.
I did that same trade. So in MNQ, it was clear setup on that 11:10, around 11:10. So I was
Mhm.
in at 11:10. So I took that sale. And before that, like 9:30 time, around 9:45, I took that buy sale also before that. So I took loss because I was looking for sale in that.
Mhm.
So I took loss after making that leg, and then it was 1 minute setup for sale. Then I took this leg.
You got it.
Yeah.
Yeah. Same thing, right?
Mm-hmm. Yeah.
There's a fair
But it
value
has
gap
it
here.
was clear, more clear, right? In comparison to MES.
Mm.
Yeah, I need to start looking at NQ a little bit more.
Mm-hmm.
I always look at VIX. Like I have VIX and
Well,
ES
look at them
parallel, but I got
together. Yeah, look at them together because they're right now. NQ is driving price right now. You do see you see fair value gap at 1030 candle. It gets inverted on the really doesn't get inverted to the 1125 candle.
So like 1 minute is more clear. This is
Okay.
5 minutes. Yeah.
Gets in, that's when it gets inverted right here.
Mm.
And then there's probably an entry around 1135. Let's see. And I said 1 minute. Let's go to the 1 minute chart. You could have taken this high the same way. But again, are we taking this with
No, no,
positive
not
news, right?
no, not this one. Where is your IFVG, right? So inside that smaller candle, I took that as a breaker, and yeah.
So you got IFVG here,
No, no.
IFVG
Yeah,
here.
this one. Yeah, this lower one. I didn't get that on first one. So this one I took as a 3D candle pattern. First was my confirmation, this one, right? So
Mm-hmm.
this FVG got IFVG, right?
Mm-hmm.
And it was entry here around, I was in at 11:10. So when it broke this low, yeah.
Mm-hmm.
Yeah, so when it broke that low and tapped that, then I was in.
So this part right here.
Yeah.
Yep. But it's the same thing, like I was saying before.
Mhm.
They taking out highs. We got positive news.
Mhm.
Unless you just playing the price action, this is a good trade setup from a technical standpoint, but from a macro slash technical, where you considering news and price action, you trading against it, right?
mm,
No, so it was like that day because that was Thursday, right? So
Mm-hmm.
3 day it was up, right?
Yeah.
So Thursday I was assuming reversal, and then like I do 5 minute and 15 minute BSL and SSL check, right? So
Mm-hmm.
before 9:30, whatever is BSL and SSL, if it is taking SSL first and leaving that buy setup there on 1 minute, then I can go for buy from there to BSL. And if
Mm-hmm.
at BSL again rejection, and then make that pattern, sell pattern, then I can get from there to sell at first, and after that lower target. So
Yeah.
I do this two way, right? So it after 9:30 it took BSL first.
Mm-hmm.
So that was my thing. It took BSL first. So I thought, okay, means this is something clear. So if it will go more up and there it will give that pattern, then I can go for this sale.
To say take the sell side liquidity.
Yeah.
Yeah. It's not a bad idea. And
Mhm.
I'm not saying that the sale was a bad idea. I'm just saying that considering the sale and what was happening as far as the news,
Yeah.
you kind of have to sit back a little bit, you know.
Yeah, right. It
And
was like mhm.
to go ahead.
No, no, just you go ahead.
No, go ahead.
No, that means because when I was looking for that thing, like one BSL and SSL thing, then
Mm-hmm.
again on 1 minute I got this 3D candle, right? And
Mm-hmm.
inside that I got that FVG, and FVG got inverted, right? So all that setup was like, okay, uh, it's time to go in.
Mm-hmm.
Mhm.
Yep. Yep. And like just to again, for me
Mhm.
particularly, I trade in a certain window.
Mhm.
Uh, and I trade within that window. And if I'm looking for the setup, I try to take whatever the setup is within that window in line with higher time frame, right? Higher time
Mhm.
frame right now says I should be buying.
Right.
And if I get a setup inside of that window that says I should be buying as well, that's the setup I'm going to take, right? If
Mhm.
higher time frame is sell, I mean, if higher time frame is buy, but a sell setup happens and it's not and there's not positive, or I mean, I'm sorry, negative news associated with that, then I can't take that sell, right?
Mhm.
Because that helps me weed out what I shouldn't be doing, right? So that says, okay, higher time frame is bullish. I have no negative news, but I have a sales setup taking off right now, right? I
Mhm.
could take this trade, but I need to have clear confirmation. And I'm only gonna go for shorter targets on that move, right? Those are the
Mhm.
things that I'm thinking about. If
Right. Mhm.
higher time frame is bullish, I must have a bearish catalyst to drive or to set up to take the trade, even if it is technical, you know. Even if it's technically selling off, I need to have a bearish driver to help me understand whether or not I should get in this trade or not, right? So I would have needed to have something. In this case, the news on this day was um,
Unemployment.
830 unemployment claims,
Mhm.
and the forecast was 205, right?
Right.
A
Mhm.
setup that would have put me in the bearish mindset would have been, let's say claims came at 300,000. That means more people are applying for 100,000 more people have applied for unemployment claims, right? So then at that point, I'm saying, okay, I have bullish higher time frame, bearish catalyst, bearish structure. I take sell. I can take it, I can take that sell, right? And that lines everything up for me, right? So at that same time, I should be looking for higher VIX. I should be looking for SMT in um, indices where and correlation between indices, right? I should be having rejected highs on each one of them at this same time, right? And on VIX, I should be having I should be having price on VIX push higher, right? So at that point, I know that I should have certain things happening at this same time, for me to get the clear setup, In this case, we had two of the three, right? We had bullish higher time frame, we had bullish catalyst, but we had technical failure, right? I don't have all the things I need to say I should be doing this certain thing. So if I don't have all three of those, then I need to sit on my hands, right? And if I do take a trade, I need to take that trade with lower risk, and I need to take that trade with maybe not in my main accounts. I need to probably use my smaller accounts or one of my other accounts for that trade. And that's what I'm saying to myself in particularly.
Mm-hmm. Right, right. Means so, right now, like for me, because of that all news, I am not 100% sure. Like means you can say like little scared kind of thing also. I want to be clear. Like 9:30 is good. Means what is happening after 9:30 till 10 I wait, and after that whatever is happening I'm going to take.
Hmm.
Yeah.
Hmm.
Right now, no. Like Friday, I saw that clear setup on MES for buy. That means I was looking at everything, but I don't know. Means I was not sure. I didn't took that. So just I was just
It's
making
because
my
it's one directional right now.
yeah,
Everything is one directional, and it's not that it's not even that you're scared, or it's just price is doing stuff that it has never done before.
yeah, exactly.
And it's not giving the cleanest entries, right? It's
Mm-hmm.
pushing up for the buy, right?
Yeah,
But it's happening at weird times, is
yeah,
not
exactly.
using familiar
Mm-hmm.
structure area, right?
Exactly. Mm-hmm.
It's just every every buy has like came and gone without giving a real confirmation, right? Like even if you take and break
Mm-hmm.
and retest in some cases, right? It's
Mm-hmm.
still not even breaking and retesting. Um, if you're taking a moving average trader, right? It's
Mm-hmm.
it's taking it's buying without crossing, if that's your confirmation, right? So it's not just that, if you are like this was Thursday on VIX too, right? So
Mm-hmm.
in the pre-market on VIX, right, we already saw we were pushing down, right? So that means price should be pushing up, right?
Yeah.
And we took this low, but as soon as we took this low on the 9:30 opening gap, we broke the gap. We pushed up on the gap, but then we traded back through it, but then we pushed back into the gap, and then we pushed lower. This is that we should have pushed up on this part right here. Indices should have been selling. I mean, buying, right? This part indices should have been buying. This part indices should have been selling. This part indices should have been buying. But on this little candle right here, wicks, this wick right here, the indices pushed and stalled. All of this indices stalled, right? And that's kind of where we got this sell-off. But we got the sell-off on indices without really doing a lot on VIX from this time frame. Like VIX just chopped while,
Mm-hmm.
kind of really just chopped, and we didn't really get a lot of movement on that day. So
Mm-hmm.
that's kind of the this setup was the setup that I had from Thursday, where okay, VIX is, you know, buying. I mean selling, right? We had liquidity here, we had liquidity here. We took the liquidity, and at the same time we took liquidity, we're at this order block, we at this gap, VIX, S&P is holding, should be looking for a buy, right? That says I should be buying, right? And once we take this all-time high, that should be pushing up higher, right? That is clear read, right? That's the only clear read we had, right?
Yeah.
Over here is right around where we got our sell-off, right? From this low to this high, right? Does this look like this says that we should have got as big of a sell-off as we got on Thursday when this whole move right here didn't really give us a strong buy, right? If you looking at this versus that, right? This sell-off on VIX gave us just this buy on ES, right?
Mm. Yeah.
You know, this sell-off on ES was only in line with this push up to the upside right here. So you having some mixed, it's a lot of mixed signals, It's a
Yeah.
lot of mixed signals going on right now. And it's not really a lot you can do to gauge everything. So what that means is I have to take more time to wait for confirmation. I have
Mm.
to be clearer with the decisions that I'm making on
Mm.
how I'm lining up my setups, right? So it's don't look at it as being scared. Is I don't like that you said that. So that's why I'm getting on you about that.
No, no, no,
I
means
don't.
escalate is, I think, not the right word, but like because of all this, and every day there was some news like unemployment that day was
Mhm.
unemployment before that news also. So I wanted to make that clear. Like news has gone, after effect is clear. Now I want to see exact setup what is, because I don't want to get trapped in that news thing, or means I don't understand those things, and and I'm making wrong move, right?
Yeah.
So it is like that.
Yeah. We're not gonna use scared though,
Yeah.
because you're not scared. It's just
Yeah,
this,
not scared. Yeah,
this is all new stuff.
yeah, I agree.
And you doing what you need to do to wait for your setup. And that's all that is. Because this is all craziness. A market is moving however it wants to, under whatever conditions it wants to. And anytime, every time we turn around, it's a new tweet coming out that we need to account for. And you can't time that. And,
Yeah.
and if it's not that, it's the planned news. And if it's not that, it is um, breaking news.
Mm-hmm.
So, and on top of this, we're pretty much in summer trading anyway. We know that it trades weird in the summer anyway. So, you know, for us to be winning trades right now is it's a great thing because we doing it during summer months. So that's the other thing to take into consideration. So, all right, I'm gonna drop the charts and I'll post this session um in the group. And
Oh, Corey, sorry, I got one more question.
no
Sorry.
problem.
Don't kill me because I always ask this. I feel like I asked you this question. This is probably my third time. I keep forgetting how to add the weekly, daily
Opening prices
indicator. Yes.
is this one right here.
It
The author is SBTNC, and it's the daily, weekly, monthly, yearly opens.
SB. Okay. All right, got it.
Yeah. And I didn't change anything on this, but I did add in I think that it comes default without having the quarterly open, which is the 3 month open. Um, I just added like I think it comes just daily, weekly, monthly, yearly, but I added in the quarterly. But you don't have to, but I added it in too.
Okay, yeah, that one is unchecked. Okay.
Yeah. So that's the only other thing that I did in particular. But that the logic behind that is, you know, it's just like, the bigger banks and institutions want to, account for whether or not they're positive for the quarter, right? You'll hear that
Mhm.
too.
Yep.
So that's why I added it.
That makes sense. Okay.
Yeah. Cool, cool, cool. All right. Okay. We'll drop the charts and we'll talk in the chats. So I will holler at y'all. I'm gonna take me a little quick nap and then I'm gonna hit the gym.
Yeah, I done got back in the gym too, bro.
Hey, we gotta do it.
I'm
We gotta
trying.
do it. We gotta do it. Peace out, y'all.
Thank
Peace out. Have a
you.
good one. Thanks again.
Later.
Later.